You're confident that crypto is the future, but you equally know that picking the winners is next to impossible. So you want to find some form of crypto ETF or crypto index that you can buy into. You might have come across Crypto20 by Invictus Capital. It looks really promising, but it's provided by a company you've likely never heard of before. Well, in this video, I'm going to review Crypto20, which goes by the shortened name C20. And I'll tell you everything that you need to know, as well as my thoughts on if it's a good investment or not. Let's jump into it. Crypto20 is a token built on the Ethereum blockchain, which can be purchased directly on the Invictus Capital platform or across other crypto exchanges like HIT, BTC, Fidelta, Uniswap or OVEX. The C20 token can be bought and sold whenever you'd like, just like any other ETF. Crypto20 was launched by Invictus Capital back in December 2017, which is one of the first tokens which allows its owner to hold a market-weighted portfolio of the top 20 cryptocurrencies in just one token. This means that C20 primarily has passive investors in mind who want to own a basket of cryptocurrencies without the need to manage them. The way that Crypto20 works is that it holds the top 20 cryptocurrencies by market cap, but there are some exceptions which I'll go through shortly. Think of Crypto20 as a bit like a crypto version of the S&P 500 or the FTSE 250. As of creating this video, the top 20 looks a bit like this. We have Ethereum, Bitcoin, Cardano, Binance Coin and Dogecoin all making the top 5. So these top 5 positions make up roughly 50% of the fund's value, with the other 15 trailing behind with increasingly small weightings. You might notice that this isn't correctly weighted, as Bitcoin's market cap dominance at the moment rests around about the 44% mark. This is due to Crypto20 having a max allocation of 10% to any one cryptocurrency. Any cryptocurrencies which hold over 10% will be then rebalanced by the end of the week, as Invictus Capital rebalances portfolio weekly. For any crypto enthusiasts, you might notice a handful of cryptocurrencies from the top 20, such as Tether, Ripple or XRP, USD Coin and Rat Bitcoin aren't included. The reason that Tether and USD Coin are missing might be obvious to some of you, as they're stable coins, but XRP and Rat Bitcoin might be less obvious. Invictus Capital have taken a step to remove XRP due to their legal issues in America, and they've removed Rat Bitcoin as it's basically a double of Bitcoin, which makes sense in fairness. This list of exemptions does extend out of these 4, which include other stable coins like DAI and TrueUSD, but it also goes further to include Maker, Mindol and VestChain due to liquidity concerns. In terms of its market performance so far, Crypto20's asset value launched around about $1.29, which quickly shot up in line with the broader markets when it launched, which got to just under $4. After this peak, it bled all the way down to 28 cents, meaning it lost 93% of its value in just 12 months. It then traded sideways for a year before hitting the most recent bull run, which pushed the asset value all the way to $5.66. Since then, it's settled around about the $3.50 range. Invictus Capital, in fairness, do highlight on its product page that this product is high risk and the time frame of holding this asset should be long term, which has only been confirmed by the price movement so far. Invictus Capital release a report each quarter looking at the performance of C20, with the latest quarter being the Q1 of 2021. In their most recent report, they do highlight the parabolic movement in terms of the market price of C20, and then have benchmarked it against Bitcoin and equally a weighted portfolio of just the top 20. As you can see here, C20 over the last year has outperformed the top 20, which has been equally weighted, but then it's been beaten by Bitcoin. So what are the strings attached with Crypto20? Well, in terms of owning it, there's not a lot in fairness. Invictus Capital do charge a 0.5% management fee every year, which is actually quite low compared to other similar products out in the market, with their fees ranging from about 2.5% to 3%. You don't need to worry about paying this 0.5% though, as they take this automatically when they reportion the allocation of each of the cryptocurrencies on a weekly basis. It's worth noting here that it's possible to earn additional income from your Crypto20 or actually any other Invictus Capital token by staking them. On their platform, you can stake C20 for up to 1, 3, 6 or 12 months at a time. Your reward for staking your tokens is repaid to you in their ICAP token. The current payouts for staking are roughly around about 2.9% per annum, and this is actually paid out every 30 minutes in proportion with how much you've staked on the platform, which I think is a nice touch. So this return should easily offset the management fee of 0.5% per year. From a personal point of view, it's worth pointing out that Invictus have a really clear and easy to use platform, which comes with all the layers of added security that you'd want to see, including two-factor authentication. So after all this, I'm sure you probably sat there feeling a little bit like I did at this point. Low fee, it's easy to use, and it has really decent security. Where do I sign up? Well, this is where C20 in Invictus Capital starts to break down for me. I'm going to make the assumption that you're new to crypto and that you'll be purchasing crypto with good old fiat money. So on their website, you have two options. You can either purchase using your debit or credit card, or you can do a bank transfer. Both of these options come with charges. If you want to use your debit or credit card, they're going to charge you a fee of 4%. And if you use a bank transfer, it's going to cost you a 1% fee. Any charges are horrible for moving your money, in my opinion, but 4% does seem extremely high. You also need to factor in that Invictus Capital work in US dollars, meaning that if you're paying in sterling or euros, then you will likely pay a conversion rate from your bank. My bank, for example, is currently charging 2.75%, meaning that my fee would be 6.75% for using my debit card on the platform, or 3.75% from using a bank transfer. For me, I'm put off from these costs alone, but surprisingly, there's actually even more fees that you need to be aware of. As mentioned before, Crypto20 is built on the Ethereum blockchain, and if you aren't aware, Ethereum has been well known recently to have very high processing fees. As of right now, if you buy $100 of C20 with either of these methods, you're going to be charged a network fee of $12.91. So based on purchasing $100 of Crypto20 on my debit card, I'll be likely charged around about 19.66% for this service. Obviously, this network fee is a fixed cost instead of a percentage, so the more you invest, the lower the overall percentage would be. But in my example, I would still have a base percentage of 6.75% before networking fees, which in my eyes is far too expensive. This also means that it's probably a non-starter for you if you want to dollar cost average your investment into this token, unless you're like a multi-millionaire. Due to the substantial Ethereum network fees, Invictus Capital have actually implemented a minimum deposit of $100 for the time being, but they have clarified that they're hoping to withdraw this once the Ethereum Layer 2 scaling technology has been implemented, which should bring down the fees. Even ignoring the network fees, I believe the base fees are simply too high and do not justify the premium someone should pay for the convenience of somebody running a crypto ETF. But all fees and charges aside, I still do have some concerns with Crypto20. My personal belief is that I realistically only expect a handful of winners long term in the crypto space. So potentially a winner takes all situation or a winner takes most situation. A bit like we have with Amazon or Google. Based on this, a cap of 10% would be highly damaging in the long run, as a majority of your portfolio would fall behind, as you're going to be forced to hold at least 80% of your holdings outside of the top two positions. On top of this, I do understand the rationale for not including stable coins, which I think is a good move, but I don't like the fact that Invictus Capital choose outside of this who gets in and who doesn't in the fund. This makes the fund more actively managed than passively managed. A lack of XRP in this fund is a massive turn off for me, even if they are in trouble in the US. So overall, Crypto20 is very attractive, and with some tweaks, I would definitely choose to go into Crypto20. However, this issue on top of the others I've outlined makes it a no starter for me, and actually eventually ended up on Crypto.com, as the other options like Binance and Coinbase had issues themselves. For me, Binance's interface was horrible, I have to say, and Coinbase had a very limited range of cryptocurrencies. For me, Crypto.com had it all: an easy to use interface, a wide selection of cryptocurrencies, and a great rewards program, which includes a Visa-backed debit card. So if you're equally as turned off with Crypto20 as I am, and you like the look of Crypto.com, then luckily for you, I have a link in the description below which gives you $25 of free crypto just for signing up and creating an account. It's that simple. Anyway, that's all for this video. See you in the next one.